Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 2nd, 2013. Lots to talk about, so let's get started. I'm just going to get right into it so this video doesn't take too long. And what I'll do is I'll hit on the points, or as many points as I can hit on. That way, we can just get this all said and done, and we know what the expectations are for in the short coming days, I guess you could call it. This is the chart of the SPY, which is the ETF that tracks the S&P 500. This is the daily chart here. And if you haven't watched the previous video, last weekend's video, please do so you have a better understanding of what I'm talking about today. In any case, if you haven't watched the previous video, this is what we talked about. We had this bearish engulfing pattern here. We had it on a very good volume, and then we came right down into this bottom trend line here, and then we got some support. I did say in the previous video that we may continue to ride up this 20 moving average, but I definitely would not go long, simply because the market has just been way overextended, and this is the proof of this overextension. In addition to that, we have this rising wedge type pattern here, and whenever you have a breakout of a rising wedge pattern, what normally happens is you get some sort of breakdown. Okay, so just keep that in mind, and that's actually all coming into play right now. We've all discussed this in the previous video, or we've discussed it in the previous video, I should say. I did also note, however, I'm not going to be one of those sly guys on other videos trying to get the money from you. I did put caution that the way the federal government has been manipulating the market, there's no guarantee that that was going to happen. In fact, the chances of it happening will lessen. It really depends on how Uncle Ben comes out and says, or if he comes out and says, I'm going to print, 10 trillion more dollars, and then you're going to see the market spike higher. But on a technical analysis basis, per last weekend's video, that's what the expectations were, and that's actually what it looks like is happening today. Alright, so let's just get right into it. We're coming down, and we did discuss this possible consolidation before breaking down. On Tuesday, which is the day after a major holiday, obviously we're going to have a little lower volume. Actually, this Tuesday was a higher volume than I expected. But we went right back into this upper trend line here to retest. In a single day, we gapped up. We went right into this upper trend line here, and then we just pulled straight back. This all still is part of this consolidation right here. Okay, let me just color it in for you. And then after we consolidate, so we have this down move, we consolidate. Don't even look at this candle over here, that's pretty much a fake out. And then now we have closed below the 20 moving average and below this upper trend, or this now bottom trend line here, which was holding as support. Okay, I did say in the previous video that we would see support at this 20 moving average, and we did with this little spike up here, but it didn't last long before heading down. Okay, and then again, like I said in the previous videos, I have a set of rules, and these rules are, if we have part of these rules are, if we have an overextended market, especially in a pattern that breaks out the wrong way, I am not looking to go long, I am looking to go short. And what I normally do is any resistance level at this area, or at this, as we go higher, any resistance levels like here, for example over here and here, and so on and so forth, I will short. And what I'll do in my shorts is immediately when we get this pullbacks, even over here, had an intraday pullback over here, I will already have a break-even stop to protect myself from federal government manipulation. A lot of people complain and stop trading the stock market and tell me that it's too manipulated. But if the expectation is that the markets will be manipulated, then you'll be able to protect yourself a lot better. And that's pretty much what I've been doing. Granted, you won't make as much money, right, as if you were, say, you went long over here, as an example. You would have made a pretty substantial, pretty good amount of money there. It just isn't part of my methodology, I guess you could call it, where I would go long in an area where I should be shorting. And I'm just going on this purely on a technical basis. You guys all know that I don't understand any type of fundamental analysis. I try to, but it always gets me in trouble. So I try to keep it purely technical. And when I tell you guys I think this might be happening, or I think this might happen, it doesn't mean that it's going to happen. It's just what I feel like. But normally with my videos, when I talk about support and resistance and consolidation patterns and whatnot, and these mathematical calculations, these are purely technical. And why do technical analysis work? Before I get into this rant, I'm just going to make it clear. Human emotion will never change. Hope, greed, fear, all those three primary emotions will never change, and that's why technical analysis will always work. The formulas for technical analysis may change as our society changes, but for the most part, everybody has these emotions, in which case technical analysis will work. And maybe at the end of the video I'll give you an example. Okay, let's just get right into this. So let me just zoom in over here. Gotta make it a little bit nicer. We are looking at this 165.80 level, which was another major level. Obviously, you guys know how well these mathematical calculations work. This calculation was created on March the 28th, and now it's actually trying to hold. Again, this is a calculation that I didn't think we would even be able to get to, but obviously we did. Alright, so we come all the way down, and we kind of break down from the 165.80, but we recover, and that recovery is the 165.93, which was not that bad. The next day after that, we pierced the 165.80. We tried to get above it, but we just could not, and we closed below it. On Tuesday, we come all the way down to the 165.81. That's 1 cent off before we get an intraday bounce. If you guys can see that. The next day, we go right into the 165.80 level. Alright, what I'm looking at is right here where the high is. On, let's see, this is the 29th. The high was 165.80. This was to the penny. So you guys can kind of tell that support and resistance, they're not to the penny. Well, sometimes they are, but in most cases, it's just a generalization. You're going to be a couple pennies off, okay? So these calculations are really, really good, okay? Well, they hold their own, I should say. We could not close above the 165.80 level. Mind you, I did short at this area here. As you all know, this upper trend line was where I shorted. I had a break-even stop. I did not, we did not close above the entry point of my short. Therefore, I still am holding my short, and right now I have this much money in the pocket, okay? And I have an in the money stop. I had an in the money stop, I think, around this area over here. Again, we didn't close above, therefore I still held on to my short, and down we go. Okay, let me just rewind a little bit here. When am I going to dump my shorts? I'm going to hold my short all the way to the 160, these two levels here, which is the levels that we talked about in the previous video, last week's video. In last week's video, I gave you the upside possibility and the downside possibility, and you all know that I wasn't planning on going long in the market. I was planning on going short. That turned out to be, thankfully, you know, the better decision. And what we've done was we've broken down the bottom of this bottom trend line and of this 20 moving average. Now keep in mind, this does not mean we're just going to come straight down right into this 158.62 level. It doesn't work that way. What we need on Monday is a close below this candle here. If we can do that, then I will be convinced that we should at least get down to the 158.62, 158.34. I have two levels over here. If we can do that, then I can definitely say that the chances are in your favor that we'll hit down in this level here. Now, keep in mind that it doesn't mean that we're going to get a solid bounce here. What if we come down here, and this is just speculation, we do have the 50 moving average here that we need to get past. Alright, we talked about this in the previous video too. We're going to have some support levels that we're going to need to break down from to get to the 158.62 level. But if we come down and say we start consolidating again, similarly to how we have over here, then I think that we could actually go lower, and that low would be the 157 level. Okay, so this is my plan of action here. If we can get down into the 158.62 level, I may initiate dump my shorts. Okay, Now I'm talking about straight down. If we come straight down into 150, into the 158.62 level, I'm thinking about dumping my shorts and then going long. We have the 158.62 level. We have this bottom, nice bottom trend line over here. My opinion is to go long short term, and that should give me some money to retest this 50 moving average here for another move down into the 157, in which case I'll dump my longs over here and initiate shorts. That's pretty much, when the market goes up, I will go long. If the market goes short or goes down, I will go short. Again, I'll be looking for more shorts than I would be looking for longs. So just keep that in mind. That's the downside. Now again, if we consolidate, let's just say we consolidate, come all the way down here, and consolidate right above this bottom trend line, then I also think we can get to the 157. If we do not, however, now this is the long side potential, and again, this is just to protect yourself from any type of market manipulation. Right now, what I'm looking at is simply the technical analysis. Technicals are saying that there is a good potential. The chances are now in my favor that we'll hit this 158 level, but it doesn't mean the Feds can't manipulate this market, right? We all know that. I say I hope we get into this 158.62 level. That way it will show that the markets are, strong and accurate, not accurate, but reliable. Because without a pullback or a nice correction or a nice pullback, I don't think the markets are very healthy right now. And in an unhealthy market, we may see another recession one day if we continue to go higher the next 3 years. I mean, at the rate that we're going. So just keep that in mind. Now, if the government decides to flip this market around and then we pop higher, we're still going to need to get above now this upper trend line here, which is now serving as resistance, that used to be support, and the 165.80 level. As you can see, does hold water. Okay, we have to get past both of these levels here. If we close above the 165.80 level and then above again, then we still have to get past this upper trend line over here. And then of course ultimately we have the 169.52 level. If we can get up here, then I have another level, which is the 175.91. I don't think we get there, but again, I've been saying that I think since the 157 level, and we've gotten way past that. So just keep that in mind. Again, I'm not bearish or bullish now, just keep that in mind, but I am still looking to short more than I am looking to go long until at least we get into this 158.62 level. If we can get into here with no problems and no bearish pattern, then I have no problems going long at this point. Okay, so just that's my analysis for the SPY on the daily chart. Alright, switching to the weekly chart here. Let me see if I can get rid of these lines. Nope. So I'm just going to reload my drawings a little bit faster sometimes. We talked about this being a spinning top candle right into this upper trend line over here, and we did it on higher volume that was higher since the past three previous weeks. And now we talked about that 158 level in the previous video, and I also said now with this bottom trend line in play on the weekly chart, does it seem so far-fetched that we couldn't get to the 158? On the weekly chart, it does not look like it would be such a big deal, or it wouldn't be a surprise to me for that matter, if we can get into the 158.62 level. And it also wouldn't be a surprise to me if we get a bounce off that 158.62 level either. Okay, so just keep that in mind as well. If I just move this a little bit down here to line up these two, this one isn't considered really a pivot. Actually, we don't even have any pivots here except for this one and this pivot up here. This just been a straight shot all the way up. But I'm going to draw this trend line anyway. And if you look at the weekly chart, it's not far-fetched. I wouldn't be surprised if we retested this bottom trend line here. Ultimately, I want it to get into the 154.10 level. That would be my prime. If we can get into this 154.10 level and then start heading higher, that is definitely where I want to move this, just as an example, because this then will be a valid pivot. And then from there we can use this as a support line. But that's so far away, we're gonna just have to reanalyze it when we get there. Alright, switching back to the daily chart, that is pretty much the gist of things. this is pretty much what I'm looking for right now. This is how I'm going to trade the market. If we go lower, that's what I'm going to do. If we go higher, get stopped out with in the money, and we'll just let this thing go higher, and I will initiate another short when the time comes. If not, if you ask me which way I think it's going to go in the short term, I think that Uncle Ben is going to come out and try to save the markets, because every time we get a pullback such as this, he tends to do that. But on a pure technical analysis basis, and we have to leave the emotions out, we must trade, or I should say I must trade, for me personally, purely technical. And the reason why I have to do that is because then I don't involve emotion. Once I involve emotion, then I will be just like any other retail trader out there losing money right now. Okay, so just keep that in mind. And I'm not saying all retail traders are losing money. I'm just saying the ones who play based on emotion they might be making money today, but in the future, if you're not consistent with your emotions, then you will eventually start losing money. I am not consistent with my emotions. If you are, then great. Then go, keep moving forward. I know there's people out there that are probably consistent with their emotions, but I'm not. One day I might think one thing, another day I might think another, and that's why I use technical analysis. That way there's no yes, no, ifs, ands, or buts. It's always black and white for me, okay? Okay, so that's pretty much it for the SPY. If you want to turn off the video, that's all I'm going to talk about as far as what the markets are going to do. I'm just going to jump right into why technical analysis works based on human emotion, which is what I always say in the beginning of the video. Here's why. Let me just try to shrink all this. So again, if you're going to turn off this video, I just want to say thank you very much for putting in your time to watch these videos and for hitting the like button. It doesn't make me money, but it does help with my I guess emotions, and it'll allow me to continue making these videos. Alright, I'm gonna talk about the simplest pattern that I know, which is a double top. The market goes up, it comes down, and of course it never goes straight up. You're gonna have your pullbacks here and here. You're gonna have your pullbacks, you're gonna have your pops over here and your pullbacks over here. Well, just keep in mind, before I get into that, one last thing. Uncle Ben might come out to do his speech about printing more money. He just might say it in a different way. Another thing we need to watch out for is this. People have the buy the dip mentality right now because it's been working for them. And if this does happen to pull back and start correcting, then they will. I will feel sorry for them because the correction will be a major one. I don't think it may not happen. I don't think Uncle Ben would let that happen. But again, it's not what I think, it's what I see. And to be honest with you, this pattern up here, okay, is not like any other pattern that you see or have seen anywhere over here. Okay, so this pattern looks like it could be making a top as we speak. So people will have the buy the dip mentality, so that may pop us. Next week we may start heading higher. One thing you want to just keep your eye on is this upper trend line over here. Okay, so let me just get this out of the way, and then we can talk about the technical analysis. So here's the thing. I know you old timers probably already saw this, so you can probably just close the video down already. Okay, we go up, down, up, down, up, down, up, down. We create a top, up, down, up, down, up, down, up, down, and create a bottom. And then now you have a double top over here, right? And then we start going somewhere. So why does this double top pattern work? How does this work based on human emotion? And all patterns work the same, and all Fibonacci retracements, everything is all mathematically calculated. But there's reasons behind it, and one of the reasons, especially for patterns, for that matter, patterns are more likely to affect human emotion than there is mathematical calculations. Like my personal mathematical calculation that I created may not have anything to do with human emotion, period, but patterns do. Why? Well, here's the thing. Say this was Apple as an example. Let's just say this was an Apple stock. Apple reached 700 at this top over here. We all know Apple reached 700. I think I called a short at 680, which is $20 off, but you know, for a $600 stock isn't that. It was pretty darn close. In any case, what happened was around this 680 mark, let's just say over here, CNBC came out and said that Apple is going to reach $1,000 per share. I mean, they had analysis coming out saying that, you know, it's going to hit $1,000 per share. I mean, that's ridiculous. So the amount of time that Apple has just been flying through the sky, people have been watching it, and people have been skeptical because it's just been going so high. It hasn't, you know, pulled back or anything. It's just a straight shot higher, just kind of like how the markets are doing right now. And what always happens, always, you'll notice this, is you always have to play the contrarian to Goldman Sachs, to, you know, all these other analysis people who do fundamentals and whatnot, who come out and say, you know, this is going to be $1,000 per share, buy, buy, buy. They have a special connection with the news like CNBC and whoever else, the papers, the blogs, and whoever else on the internet, and they will release this news because they own millions of shares of Apple, and they need, in order, we all know, in order to make money, you need to actually sell your stock, right? If you don't sell it, you're not making money. So if someone says, I am making $1,000 off this one stock, they haven't made it yet until you sell it, right? So staying with these greedy institutions, they'll come out and they'll try to manipulate you. It's not just the government who manipulates people, it's institutions who manipulate people. They'll come out and say, okay, Apple's going to be $1,000 a share, you know, buy, buy, buy. So at 680, everybody's like, yes, I'm going to go buy it now because Apple is going to reach $1,000 a share. Apple is going to go all the way up here, right? Now $680 per share. How much shares can the average retail trader buy? I don't know, maybe 10 as an example. Not very much. So even if Apple goes up to $700, it's not going to be very much for them to bank. They got to pay commissions to, you know, trading software like this and your brokerage companies and whatever the case may be. Then there's greed that sets in after it goes up $100, because say you buy 5 shares and it's you know, you buy it at 680 and it's already at 700, and in your mind you're thinking, okay, $1,000, I got a lot more ways to go. I'm not gonna dump Apple for $100 profit, and then I gotta pay what, $20 to my brokerage company, so that's only $80, and they're saying it's going to go up to $1,000. I'm going to hold on to it, right? All right, so they hold on to it because they're inexperienced retail traders. Inexperienced, okay? They don't understand how manipulation works. At the $700 mark, they're like, the CNBC is on fire. They're throwing parties. They're clanking their wine glasses. Well, you know why? Because the institutions are happy. They're celebrating that they're able to dump their shares off to these retail traders. Now, the retail trader buys 5 or 10 shares. You know, that's not very many, but when you got a million retail traders doing that, then they're selling all their shares off to these guys. And they're banking, they're making the money, right? At $700 over here, okay? You got another set of retail traders buying it at 700 because now you got institutions saying, oh, it's gonna get up to 1,500, so buy, buy, buy. So the ones who bought here, they're sitting pretty in money and $100, but they're holding on to their money. And then up here, you got people who are buying it at the top at $700. Okay, the market starts selling off, or not the market. Apple starts selling off because now institutions are selling off all their shares. Okay. Retail traders who are scared are start selling off all their shares. Okay. People over here probably sold off here if they were smart, but some people aren't. People who bought here, however, at the $700 mark, are holding on to it because as soon as they buy it, whether they use a brokerage company or broker or whoever, as soon as they buy it, they're calling their broker and they're saying the stock is going down, I'm losing money, and the broker goes, hey, wait a minute, this is Apple. Don't worry about it. It's just a small pullback. You're going to get a bounce. Okay, sure, no problem. The guys who start selling over here get out break even, and then you get a small bounce, right? Because they're trying to get out, right? They're covering their, not covering their shorts. They're trying to get out, so they're just selling what they can, and people are buying, right? More people are buying because the people who said 700, they figure it's too late now that it's pulling back, they're gonna buy here, buy the dip mentality, that kind of thing, right? So you get a small little bounce, and that's why markets don't always go straight up and straight down. Okay, now people here are still holding $700. I'm already into 25 minutes, so I'm gonna make this tutorial real quick. Eventually it ends up down here for a double bottom. We won't get into that because we're talking about a double top. Okay, now these people, they're mad because that's their life savings. For some retail traders, that's all they have. Okay, and they got a family, they got food to put on the table for their kids, and right now they're losing a lot of money. But for them, it doesn't feel like a loss until they sell it, and that's why normally everybody holds on to their shares. That is why, psychologically and emotionally, that is why they hold on to their shares, and that's why if you're going to use technical analysis, if you're going to trade the stock markets, you're going to have to put stops in place. And that's the hardest thing anybody has ever had to learn about the stock market, is stopping out. That is the absolute hardest thing, because they don't want to admit defeat. It hurts their male ego. It means that they're wrong, and it means that they're losing money. Okay, so the people who stopped out here were smart, but the people who stopped out here, who bought it at 700, were smart. Okay, but the people who didn't are holding on, holding on, holding on, holding on, holding on, and they're cringing. Their wife is mad. You know, they're losing money. It's crazy. Then Apple starts going higher and higher and higher and higher and higher, and then now whoever bought at 700 is happy. And it starts going higher, and again, you know, you're gonna have your pullbacks, right? It doesn't just go straight up and boom, we hit the double top. Whoever bought the $700 mark was suffering for, say, a year or 2 years, or I don't know how many months it took for the stock to get up to the same $700 mark. Once it hits that $700 mark, they're gonna get out. They're gonna sell, break even, because they don't want anything to do with the stock market anymore. They just want their money back. That's all. They just want to be able to put food back on the table for their family. So everybody sells. We get a nice sell over here. And why is volume so important? So we get a nice sell off, and then we get lots of volume on that sell off. And say we get a reversal candle. So say the volume is like here. We get nice volume off that sell-off. That volume indicates all these people over here just trying to get out of the market. Okay, and we get a reversal candle. Say like we get some sort of shooting star. I love shooting stars, by the way. Shooting stars on high volume is the best. It's because we went straight into a resistance point, which is a double top, and then we start selling off on high volume. That's all these guys. Then a short initiation to me would not be such a bad idea. You could, if you shorted the day after, I think that's too late. But if you shorted right at the W top here, I think that'd be perfect, because as soon as you pull back intraday on the spinning on the shooting star, you're already in the money this much, and you can already have a break-even stop in case we go higher. That, because that does happen. A double top doesn't give you that guarantee that we're gonna pull back, but it puts that the odds in your favor. Okay, so that's 28 minutes. I'm already into this video. I hope this little tutorial helped you in understanding why patterns work based on human emotion, and why technical analysis will always work as long as humans will think the way they will continue to think. Sometimes it may shift, sometimes it may be different, and that's because of the federal government manipulation. Plus, it's also the fact remains that society does change, but emotions will never. Fear, hope, greed, all those things, they all come into play. Okay, so people hold on to their stock here. They fear that they're going to lose money, and they also have hope. Okay, so they hold on to it. As it goes up, you hit here, they get scared because they might lose their money again, and then they sell off. The sell-off comes in with more fear, because people who bought over here are probably thinking the same thing, get out, because they made their money. They thought it was going to go higher. They got greedy, right? So some people will think that it'll go past there. You know, a lot of guys that do that. And, you know, you guys know the rest pretty much. Anyways, thank you very much for watching these videos. I do appreciate it. Again, I appreciate hitting that like button as well. Of course, you don't have to, but I do appreciate it anyway. So, that does it. You guys all prepared for next week? You guys understand what I'm gonna do? It doesn't mean that you guys have to do it, obviously. All of you who watch my videos. In fact, there was some guy that posted on one of my videos saying that the market's already, at a price that he predicted. I forget. It started with an S. I do apologize, but that's great work on your part. Much respect for making that call. But yeah, that's about it. That's all I have to say. Besides, I hope to see you in the next video.